Our next guest expects this gold rally to continue. Paul Mladjenovic joins us now. He's the author of Precious Metals Investing for Dummies. He's with us now. Good to see you again, Paul.
Thank you for having me back.
So gold on a tear, trading at a one-month high as we speak now, but 1260 is a key level here. Do you think it can reach it and hold it? What are your thoughts, Paul?
Well, you know what happens. If the short term, I'll say it'll go to 1260. It'll probably go to 1240. But I think definitely once it breaches that level, it should continue to zigzag upward, I think.
So would it not be time for investors to consider the contrarian trade here, perhaps, and get out of gold? I saw a few people suggesting that.
Well, the thing is this, you know how these things go. You can for people who are trading back and forth, I mean, that's fine for using that kind of logic. But you know what happens, and it tears upward. I think for people, they should be maybe continue to accumulate on the long-term gold side. But the traders among us, I mean, I'm not going to call that one because I still think it has a long ways to go and go north of 1300 in due course.
So what's the conviction based on here, Paul? Why are you confident this rally will continue?
Well, for the most part, often when you're looking at gold, you're really looking at all the rest of the world and see how that's running. And I think that you see that the stock market rally has been starting to stutter. There's been more problematic things coming out with pensions and some other venues as well. The world landscape seems to be getting more tenuous. So I think there's a lot here on the launch pad. I think the risks is not being in gold and silver. At this point, I think the risks are when you're out of it. So people have to be careful about diminishing their holdings here.
Okay, and how much do you recommend holding here? What percentage?
Well, everyone's going to be different, obviously. The rule of thumb, I think 5 to 10% for most people is not a bad idea of their investable assets, because we always look at this as a diversification. And with paper assets becoming more and more tenuous, and with the dollar becoming, it looks like it's more weaker and more dubious, this is one time when hard assets like gold and silver should be a prominent place in people's in activities going forward.
All right, Paul, just some thoughts on silver now. One analyst I spoke to yesterday said, don't be surprised if silver hits $20. Do you agree? And what are you seeing?
Oh, no, I think it'll definitely go to 20 and probably beyond. So I'm very confident and probably end up being a holding pattern there. But I think the next few years, I think, don't be surprised if within 12, 24, 36 months, it reaches and even breaches its high from 2011.
And Paul, besides gold and silver, did you see rhodium today? Spot price is up nearly 30% year to date.
Well, that one is going to be a lot more volatile in this regard. And I think for a lot of people, it's no real easy way to trade rhodium except to find out about if there's any small cap stocks are involved in it. But again, that one I think is, I don't know, that's a tougher call really for a lot of folks, including myself, versus gold and silver, which have a much more predictable marketplace.
All right, you're not ready to take rhodium home yet, Paul.
Not yet.
All right, thanks so much for joining us.
Thank you kindly.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.